Welcome! This is a basic introduction to limit orders and market orders. This guide will briefly cover limit orders and market orders, the difference between each, and where you would want to place these. There are two main types of order you can place on Deribit: limit orders and market orders. It's important to understand the difference between the two as they behave very differently to each other. Each one has advantages and disadvantages, and so there will be different situations where you might want to use each. A limit order is an order that is placed at a specific price chosen by the trader before it is placed. If it does not execute immediately, it will sit in the order book at the limit price chosen until it is either filled or cancelled. Limit orders give a guaranteed price, as they cannot execute at a worse price than the limit price chosen. However, this of course means that they are not guaranteed to be filled. For example, let's assume Bitcoin is currently trading with a best bid of $9,999 and a best ask of $10,001. If you place a limit order to buy at $10,000, your order will now sit on the order book at $10,000 as the best bid. It cannot execute at a worse or higher price. However, to be filled, another trader must now sell into your bid. If the market moves upwards away from your buy limit order, you will be missing out on the upwards price movement. If you don't want to miss out on any movement, there is a way to get on board straight away by using a market order. However, using a market order comes with its own disadvantages. A market order will execute immediately at the best bid for a market sell or best ask for a market buy. If it fails to fill completely at the best bid or ask because there is not enough orders for that price for a complete fill, the remaining position of the order will then move on to the next best price. If after exhausting all the orders at that level, the market order is still not completely filled, it will then again move deeper into the next best price, and this process will repeat until the entire order has been filled. Please note there is one exception to this. If the order moves so deep into the order book that it hits the trading bandwidth, at this point a limit order would be left at the bandwidth price for the remainder. You can read more about this in our blog on Market Order with Protection. A link will be in the description below. As you might imagine, this has the potential to execute at a worse price than intended if the order book does not have a lot of opposing orders in it for the market order to execute against. This phenomenon is known as slippage, i.e. how far the order slipped into the order book. Now, maker versus taker orders. A maker order is one that sits on the order book providing liquidity for other traders to trade against. Only limit orders can be maker orders. A taker order, on the other hand, is one that executes against a maker order, thereby taking liquidity off of the books. Market orders will always be the taker, but it is possible for a limit order to be a taker order. If the limit price is higher than the best ask for a buy or lower for the best bid for a sell, then it will execute immediately and act as a taker, unless the order has the post-only box selected. More on this soon. Deribit operates a maker-taker fee model for the futures and perpetual products. This structure offers a small reward or rebate instead of a fee for orders that provide liquidity, i.e. maker orders, while charging a fee for orders that take liquidity, or taker orders. For example, if trader A has a BTC sell order for $1,000 sitting in the order book at a price of $10,000, and trader B then executes a market order to buy $1,000 which executes against trader A's order, trader B is said to be the taker and so will pay the taker fee. Trader A is said to be the maker and will receive a maker rebate. So trader A will not pay a fee, instead given a rebate for providing market liquidity. Let's take a look at the UI. This is the limit order form for the BTC perpetual contract. At the top, here you can choose whether you would like to select your position size in USD or BTC. Bear in mind that no matter which one you choose, all orders are rounded to the nearest $10 for BTC futures and perpetuals. Clicking this little icon here will bring up a handy profit and loss calculator. Below, here you can choose what type of order you would like to create. Clicking more will show you the options for stop orders. We will cover stop orders in a separate lesson. The quantity field. This is where you enter your position size. For example, if you would like to place an order with a position size of $20,000, you simply enter 20,000 as shown. The price field. This is where you enter the price you would like your order to be placed at. You will also notice just above the price box there is a minimum sell and maximum buy. These two figures represent the current trading bandwidth, the price range that an order can be executed at that time. Please note the bandwidths are set a certain percentage either side of the current mark price. Limit orders may still be placed outside of these bandwidths, but no trades will execute outside of this level until the mark price moves. The buy and sell buttons. You will notice underneath these buttons are the minimum margin requirements for placing each order. This is a minimum amount of available margin you need in your account to open a position. The time and force rules, GTC or good till cancelled. This order will stay open until it is either filled or cancelled. FOK or fill or kill. This order must be filled completely or it is cancelled. IOC or immediate or cancel. This order must be filled immediately or it is cancelled. The difference here being that a partial fill is acceptable. So if an IOC order for $20,000 is placed at a certain price, but only $7,700 is available at that price, then $7,700 will be filled and the remaining $12,300 will be cancelled. There are some additional rules below as well. Post only. A post only order will only act as a maker order, i.e. it will not execute against an existing order on the order book. If the limit price selected would otherwise cause it to execute immediately, the price is adjusted to one tick away from the price that would cause instant execution. For example, if the best ask is at $10,000 and you place a limit buy at $11,000 with post only selected, the order will be placed at $9,999.5, so it will not execute immediately and become the best bid price. A hidden order. A hidden order will not be visible in the order book to other traders. However, a hidden order will always pay the taker fee. Reduce only. A reduce only order will only be used to make a position smaller. It will never make a position larger or open a new position. And at the bottom, your current position size. This will be a positive number for a long position and a short position will display as a negative number. And on the right, your maximum leverage currently available in this instrument. Bear in mind that this is not your current leverage, but the maximum. This is the market order form for the BTC perpetual contract. There are of course many of the same features as the limit order form, but some of the items are gone as this order will be executed immediately. However, the order form is largely similar to the limit order form. Here you can choose whether or not you'd like to select your position size in USD or BTC, the profit and loss calculator in the top right, the order type, and the quantity field, represented in dollars. The market order form is different from the limit order form in that you cannot choose the price for the market order. It is instead executed against the best order, the highest bid, or the lowest ask respectively. Note that there is only a reduce only toggle here as the order is executed immediately. Post only and hidden cannot be used. The current position size, this is also separate for each instrument, and on the right the maximum leverage currently available for this instrument. In summary, a limit order gives a guaranteed price but not a guaranteed fill. A market order gives a guaranteed fill but not a guaranteed price. Which one you choose for a given situation depends on which you value the most, making sure your order gets filled or making sure you get a specific price. Rebate or fee, the choice is yours. Thank you very much for watching.